What's going on, everybody? This is Jacob Shoup. You're watching the Tom O'Brien Show. Wow, what a day today. We are potentially going to be joined by Basil Chapman. He's vacationing in the land down under, but we're gonna see if we can get that connection going. And of course, we're gonna have Tim Ord on today. Man, a lot of stuff going on. I kind of had to hedge a little bit today. And some of my stuff, which did stop bleeding a little bit, which was nice. Something that I think might be worth discussing that I did is I ended up taking profit in SMCI, okay? So the whole idea is that they're supposed to report today. I got, luckily for a profit of 169%. Just on those calls, we had 37 strikes. I sold, I don't know, like at 49 or something like that. It has been kind of volatile throughout the last bit of the day here. I did actually end up keeping my puts, which is a 36 strike price. That actually has been doing kind of well today too, although you're getting some movement to the upside. But it's very volatile in between that $46 and $47 area. Okay, so what made me change kind of my opinion? There might still be the event that they do publish. I think that the convertibles was a little bit spooky, right? I think there might be some revisions in the 10K if they do file. The fact that they have not provided any kind of visibility on this filing beyond that 8K they had, I believe it was February 11th, kind of irks me a little bit, and I don't want to play that game with these guys. They still have the ability, right, to not publish today, and they can get delisted, and then they can appeal that in March 25th. They would, long story short, it just got to a point where I wasn't very happy, kind of with the management of the company. I would have, I'm in this kind of position where if, let's say that we all had a company together and we didn't report earnings for, multiple quarters and missed a 10K on top of that. And we say, hey, don't worry, we're pretty confident we're gonna be able to publish. And then we say nothing to you after that, right? And all of our social media is still posting all the time, right? Oh, look how great we are. You clear big convertibles, right? That actually, do have a, basically, like, they have a put option in them, right? Which is kind of insane. If things in the business materially change, read that as they get delisted. Nice bump up right now. That's some decent volume to the upside at 47.28. This is what I'll say, right? If they publish tomorrow, okay, that's fine. I mean, the puts, the premium that I'm paying for the puts, not a big deal. That gets absorbed by my gains that I had on the calls. If they publish tonight and things are good, this stock has a lot to rally still, right? And so, you can still get kind of exposure that way. That's one way to look at it. But I'm getting somewhat hesitant of buying any of these current dips right now. Really what we're all waiting on is NVIDIA. If NVIDIA has good forward guidance, we're going to be good to go. If for whatever reason they could even be growing, but it's not as good as people are anticipating, this will correct even further. A lot of what's going on right now, and I'm not really sure what the catalyst was. The only thing I can kind of think of was that TD Cowen paper saying that, Microsoft was canceling data center build-outs. And if you read that paper, first things first, what you would really pull away from it is it kind of seems like that would be business specific, right? Microsoft has been one of I think the largest purchaser of basically compute, right, of megawatts over the past few years, and that's to build out Azure, right? Also, these data centers are a little bit different, right? What you use to run AI is not the same as Azure, and so on. Or trad cloud, I should say. So that in and of itself doesn't, give me any fear. Additionally, we don't know what it is. So I think a lot of that was speculation. What it would also say is they just reported CapEx, right? And I don't think that they would pivot that quickly on capex. Like, I know we said this much for capital expenditure and data centers, but actually we're wrong. We figured out that the market is way too saturated with compute, so we're going to reduce that. I think, I mean, that wasn't going to happen, and that is not what happened. And thank God you had the CEO come out and say, no, we're still doing this. And again, still, I would argue it, even without that knowledge, it was clearly a business-specific risk if you knew anything about it. I don't know if that was the catalyst. You never really know. One of the things that I can say, and you're looking at things like Tesla, we were short this thing, 280 for May. What was the logic behind that? That things have gotten materially worse in the economy, materially worse in this business. You have this massive run-up from Donald Trump winning, not necessary, and there is nothing to sustain that, right? And so what I would say is a lot of the equities that benefited from that Trump run-up, look and see what's going on for them. One, economy is getting tougher, okay? I'm concerned we might get to a level of stagflation at some certain capacity, at least for a vast swath of the population. I think that you already have certain portions of the population that are in recession, or at least feel like they're in a recession right now. Of course, you have the top earners spending money so they can keep spending forever, and we went through that a few years ago, and things resolved. But, I think at least for some of these equities that moved up rapidly after Trump's win, look and see how they did over the last quarter. And if they didn't do well, these things are going back to pre-Trump levels. Okay, I mean, I could see this easily hitting this gap up from earnings, right, around 250. And that's really what needed to happen. These kind of equities need to reprice themselves, right, get back to some decent move that you had last time you had good earnings, and you need to work from there. Okay, that's kind of what I'm looking at with that. And so regardless, I think Tesla's, I'm in TSLZ as well, so that's some nice movement to the downside, and I just needed that because I was getting eroded mainly in Nebius and TSSI. To give you some visual and what I'm doing on TSSI, okay, so this is pretty gnarly, right, to the downside. Again, this is data center type deal. They also have very tight margins. They also had a high PE. The question is going to be, especially for things like Kava that are reporting today, this is food. Is this market going to accept these super high PEs? Earnings expect to 3 times there. You just divide that out, it's still pretty high PE for a food company. $11.4 billion. These are just things you got to kind of ask yourself when you're starting to tighten the belt a little bit in the country. Folks, stay right there. We'll be right back.